All right, good morning, everybody. Let's get this party started. Today is the 19th of February. That makes it Thursday, February 19th, 2015. This is your daily live Forex strategy session. My name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. We're investing into you up front, hoping that you can develop a long, prosperous, successful, profitable Forex trading career, and that you'll choose Traders Way as your partner, as your broker. So please open a live account. Hey, let's go around the world. British pound, very strong. Euro, very weak. Swissy, very weak. Yen, quite strong. Dollar, quite strong. Aussie, moderate to bullish. CAD, moderate to neutral. Kiwi, moderately neutral. Okay, we got some action going on now on the kitty CAD, so we'll see where that plays out. So let's go through the charts, huh? Please be advised that trading and investing is risky, especially with leverage, and therefore not appropriate for everyone. Your past performance, good or bad, does not predict future results, and never risk money you cannot afford to lose. Hoo-ha. All right, let's go through them fast, huh? Looks like my computer's a little slow. Apologize for that. Come on now. All right. Anything change here on the Aussie dog? Is Alpha Dog broken out? Nope. Okay. If you were a bear on the Aussie and a bull on a dollar, did you have a trade opportunity? Yeah, it looks like if you drop in, especially a smaller time frame like this, yeah, it's plausible. Right? It's plausible. Reaction to the news, up to resistance and down. I think we talked about that, right? Yesterday, wasn't the message identify support and resistance, let the news event happen and get it mispriced, trade it back into the proper direction. So anyway, maybe there was an opportunity there. Who knows? Okay, drop into a smaller time frame, take a look at it. Seems like a double top to me. Look at the oscillator. Okay, pretty key. But let's say you missed the first one. Let's say you missed the double top for whatever reason. You were on a different planet, right? Happens. You can't see them all. Where's the second chance trade? Remember, if you're patient, Forex will reward you for that. Do you guys see the second chance trade? Type in a question mark if you don't know what I'm talking about, and I'll be happy to explain it quickly. Okay, let me fire up my drawing tool then. But I want you to remember that while the drawing tool is loading, Forex will reward you if you have patience and discipline. A lot of people feel like trading is the opposite, but I've never found that to be true. If you wait for the trade setup you're waiting for, or looking for, you very often get it. It's when you start chasing price that you run into problems. All right, so first of all, let's identify the top. I'll do that one in red. Okay, and remember this gray zone goes back many, many days. So, I mean, we clearly knew that that was resistance. So it seems to me if you're a bull, you have the opportunity to sell that. Either the one touch or the double top, probably the double top, right? And then what? You take support, hold support, okay? You notice how it makes a lower low? So let's say you're not the world's perfect trader and you didn't get that, the double top. Okay, that's fine. I mean, you can't catch them all, right? But you know what you're supposed to catch? Is the change in direction, right? Double top, lower low, double top, lower low. What's the standard operating procedure in this situation? As soon as it does that, I mean, obviously it's no longer potentially an uptrend, right? Yeah, now you fib it. Standard operating procedure. There's nothing glorious about it. So in this case, take a fib and you drop it like it's hot. So you should have been ready at the top if you were a bear, though. I mean, that's why we identify these support and resistance levels, right? That's a place to sell if you're a bear. And this, like I said, this goes back days and days and days, weeks. I mean, whatever. Okay, so if you're a bear, that's clearly, absolutely clearly a sell zone. Fine. But even then, what if you miss it? Is all hope lost? No, of course not. Look at that. So I keep changing time frames here, but I just want to show you that it's tradable. Okay. What I don't want you to do is chase price, but you could say, all right, that here, how about there? You can say, all right, I missed the double top. Too bad. So sad. Okay. But we've now made a lower low, and we're kind of in this area. So you really, you could have shorted here, because you could see it did pull back. But ideally, the one I'm really talking about is this one. Okay, we're just looking at a 5-minute chart now. Okay, the second chance. It breaks out, pulls back. What used to be support is now resistance. Drop it like it's hot. You could call it a 1, 2, 3 double top with a lower low, set up the lower high. You have plenty of time to be ready for the second chance. It's still paid pretty good, right? That's technical analysis. But if you wonder why I spend so much time identifying support and resistance, it's because nothing matters without the support and resistance. If it double topped and there was no resistance, I wouldn't trust it. You have to start with this first. Then you say to yourself, that is where I want to see a pattern, a reversal pattern. And ideally at a market open, right? Shanghai open, London open, New York open, that kind of stuff, right? And ideally it's overbought. Well, we had all of that there. Go through the euro. The talk is about Greece, obviously, when it comes to the euro. Greece finally submitted a formal request for an extension. Boys and girls are going to meet on Friday, I think. Review it. Fine. You know what I think is interesting? The ECB is going to release meeting minutes. Well, oil be. That's interesting to me. As an economist and as a macro trader, now I get to peer into the crazy minds of the ECB. I get to stare inside the mind of a European. It's all going to be like cartoon, right? It's going to be like mice running around with hammers chasing cats. No! Toontown. Right? The ECB meetings are like Toontown. So anyways, any transparency, or let's say any additional transparency added to a central bank is welcomed. It's welcomed big time. Okay, what is it that we're looking for in the Euro USD to start trading? What have we been doing all these days? Waiting for an indication to trade. Either I want to sell it way up high at resistance, or let it break out, make a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Still hasn't done anything. Now, I'll tell you what. I wrote a magazine article, I don't know, 6 years ago. And I defined the difference between a good trader and a great trader. Both have the same amount of, let's say trading education. Both have, solid understanding of technical and fundamental analysis and all that kind of stuff. So the key difference between a good trader and a great trader is that the great trader knows when to stop trading. A good trader will make 6 good trades in a row, and then even though there are signs the market's slowing down, he'll do it again one more time, one more trade, but that represents a 20 or 30% decline in profits, because now that's that one extra trade drew down their profits for them. And an excellent trader will say, well, it was good 6 times in a row, but the 7th I'm gonna skip. And so I'm looking at this chart, and we skipped this pretty quickly, right? We've been looking at this for days now and just going, not interested. Can you imagine the frustration that one may have had if they were trading Euro USD and it just wasn't going anywhere? So all I'm saying is, look at the charts, ask yourself, are you a bull or a bear? And then ask yourself, is it trending or is it range bound? Look at this and I'm like, I'm a bear, we're not at resistance, it's not trending, next. And it's kept me out of a lot of bad trades. Yeah, someone else is, gonna break that for us, right? So at the end of the day, the best traders, it's not that they don't have any more losing, or let's say their winners aren't bigger, they just have less losers. Something like that. I don't know. Run with it, babe. All right. Let's go to Pig Dog. Piggy, 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 can't you see? Sometimes your pips just hypnotize me. All right, cool. Now what? Potential for short? Yep. Let's go into a smaller time frame. Sort of this area might be supportive. You know what? Let's not draw it that way. And I just love your trading ways. Guess that's why you're broke. They're so broke and you're so paid. So I don't know. I'm kind of looking at this bottom one, right? And this top, that's kind of like maybe the launch pad. If you want to take it up a little farther. But we identified this gray zone above us as a sell zone several days ago. Look at this big green candle, whack, straight down. Didn't last very long, did it? How many people here are actively practicing their ability to identify support and resistance? Yeah, Luis, Wyatt, Daniel, Ron, Marina, Jimmy, yeah, Kareem, Kenny. Yeah, good, good. So going through this, doing my analysis the way I'm doing it, you're okay with it? Sometimes I'm worried if it's too slow, but you got to have these, you got to have the ground strokes, so to speak, right? Yeah. The reason for that is I want you to be an independent trader. Like I said, traders was making this investment up front into your future success. And therefore, maybe you'll choose them as your broker on your long-term successful career. And I believe the only way to achieve that is to be completely independent of other people's analysis, right? You should be able to do your own analysis, make your own decisions, so on and so forth, right? DeBeesta says likes the weekly support and resistance, the weekly pivots as support and resistance. Okay. Um, Pivot points are support and resistance for market, but we also need to include support and resistance for price. And when they overlap each other, your odds are most favorable. Okay? So you got a big piece of the pie, but not everything. Just make sure. And again, the difference is pivot point is simply a calculation of yesterday's high, yesterday's low. You look at the close, so it's a weighted average. Divide by 3, and you got a central pivot point. A couple more calculations. Now you have support and resistance pivot points, right? Midpoints are just the middle point between R1 and R2 and S1 and S2. It's all very easy, but it's all based off basic calculations of what happened yesterday. What was the market like yesterday? Was it a Did it move a lot or did it move a little? Did it close high? Did it close low? That's all it is, right? But does that account for things like psychological levels? No. Does that account for things like reversal patterns? No. Does that account for, you know, trends and channels and stuff like that? No. So that's why you need more than just a calculation of yesterday or let's say last week's high, last week low, the closing price at the end of trading last week, divide by 3. Right? There's more to it than that, but it's certainly important because traders, without a shadow of a doubt, use pivot points. Let's move over to New Zealand, where men are men and pips are nervous. All right. Just looking at the timing of these things. These dotted lines are the open of markets. Asia open, straight down. Interesting, huh? Asia open, straight down. Asia open, down, up, boop, boop, all over the place. So what do you want to do with just backing out, adding some more time. That could be interesting in the future, don't you think? I'm going to mark another one. I think that's going to be important. I'm going to add one more. Apparently they're just fibs, right? Really drag this down further. I'd like to, but I think it's just too many pips. I'm going to leave it marked right on the bottom of the wick. So right now it's supportive than resistance, right? Much more support than resistance, so. Bull, put together a bullish trade plan. That's all. Just seeing if there's anything else that makes this look interesting. Yeah, no, if you're a bull, set it up. If you're a bear, you're at support, ignore it. USD Kitty CAD. Sure, we can go over oil. So, yeah, what do we want to do with oil? Let's get rid of this old line. It was a prediction of where the future 200 EMA was going to be. I have blue lines here to suggest that we're range bound. I believe we did talk about if you wanted to, we are at the bottom of the range, you could buy it. Monthly central pivot, blah, 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 blah. Maybe just skip it. It's range bound, that's all. You could trade the range, right? You can trade the range here. If you think oil prices are going to go up, that should benefit the CAD. The CAD's already overbought. We're fairly close to moderate resistance. There's a little more resistance, a little higher up, and then resistance way up here, right? So one of those three places up top, you would sell it, this pair. Depending on how aggressive you are, right? For that, you're probably going to need oil prices going up. So that begs the question, what is oil doing? Let's do that now. Debista, are energy prices expensive in Nepal? I think you're telling me how butter candles are now Chinese LEDs. Somehow it just wouldn't awaken my spirit. Anyways, let's see. Oil. All right, let's get some tools on here. Oops, didn't mean that. Okay, price reversed at the monthly resistance pivot weekly M3. Cool. Let's add a little more time to this. Okay. I don't know. Do you think it was possible that a short could have been planned out? What do you think? To be nobody leads, they're just related. Right, guys? That's pretty obviously resistance, right? I think if you wanted to sell it, that would not have been a complicated trade. And see, that is a point though, right? Do you know what you want to do before you even open your charts? Or are you just looking for trades? Trying to figure it out as you... I think there's a big difference. A trader with a bias that has an opinion based on some sort of fact, even if their facts are wrong, in their mind it's right, and I'm okay with that. It's making a big flag. Yeah, I'd be careful with all of that. Be careful. The world doesn't work because, you see a flag. I mean, what makes the world work are global macroeconomics. So, I wouldn't go too deep into patterns and stuff like that. I don't know if that's how you have it drawn. It's not really a flag because I see this as a top, where flags are typically like this. You get a big move, okay, boom. Then it makes a decline, fine. Then it makes a lower high. Then it makes a higher low. Then it makes a lower high, okay. Well, we don't have that either. I mean, that's a triple top. So it's not really a flag either. But either way, I don't care. It's all semantics, right? The way I'm looking at it is it's not trending up or down. Oops. So it's range trade. Okay, it's just range trading. To me, what I'm looking at here, again, is global macroeconomics. The global economy is relatively slow. Oil supplies are relatively high. Are we, is there a reason for oil to skyrocket? Has something technically changed, fundamentally changed? Has the market changed? No. So, the oil market, right? The market participants are trying to find the right price. Okay, I think the crash is done, but this could work its way all the way down back to 44. It could work its way down to 34. It could work its way up to 74. Okay, but right now all I'm doing is I'm looking at it. Am I a bull or a bear? I'm actually quite neutral. I can see how oil prices can come back, but logically I don't think it'll be soon, right? And I can see how oil can come down versus before it was just way overpriced. So now it's collapsed, and now we're trying to find the proper equilibrium price. So in this case, as the market's trying to figure it out, you could just keep trading in the range. Until when? Now, we covered this yesterday and the day before. You keep trading the range until what point? At what point do you stop trading the range? Yeah, until it breaks. And then you start using trend trading strategies. Right, guys? We don't have to make it overly complicated. I think the oil market right now is in fluctuation. We've had the dramatic decrease, right? How does that affect things? Negative inflation in the UK we saw this week. And Carney's not worried about it. Why? It's oil prices. Did you guys see the 60%, 60% decline, or I guess improvement, in Japanese trade data? 60% month over month in trade balance. 60%. That is crazy ridiculous. 60% month over month. So do you think Japan sold a whole bunch of Toyotas and Hondas to the tune that their trade balance changed by 60%? No. Japan imports oil. How much oil does Japan import? Well, when they shut down their nuclear power plant and started to import oil as their only source of energy, Japan spent every yen it had on oil. The country, the full economy had to run at 100% just to pay for the oil. Didn't sound like a good long-term strategy, but they had to shut down the nuclear power plants to make sure they were safe after the earthquake. Japan has no energy of its own. So, anyways, what's happened was oil prices dropped by about 60% in a month, and guess what? Japan still imported oil, they just paid 60% less. And now put that into context. Trade balance was affected 60% month over month, and oil dropped by 60%. It's like, I'm telling you, that's crazy. All right, so here's my guess, guys. We're going to have affordable oil for quite some time. This could go up for a while, then I think it'll come down. I think it could go down for a while, then I think it'll come up. But generally speaking, I don't think, I think $50 is pretty fair. $65, I think, will be the high side. $35, well, you know, it's possible. And, you know, I've been around long enough that it was $35 at one point when we were trading. So, you know, yeah, but I think that'll be the low side. But I did learn something today. Not bad for somebody that's 40 something, right? When, let's say, Saudi Arabia, huge oil producer, decides they want to bring some supply into the market, and they're going to build new infrastructure to pull new oil out of the ground. Okay? They find the oil, it's under the sand, they're like, all right, let's get this up. So they start building the infrastructure, and it takes about 4 years from the time when they start spending the money until the time they turn the tap and oil comes out of the ground. Right? 3 to 4 years. With shale oil, if somebody says, oil prices are up, I think I'll pump some of this oil out. It takes them 28 days to do the same thing. You can start your infrastructure project, 28 days later, you're pumping oil, versus 4 years. Now that is a disrupting technology, and I wasn't aware of that that difference. Wow. I wish they could do that with wine and bourbon. Skip the whole 20 years of maturation, right, and get her done in a month. So anyways, just amazing. So if oil prices go up, somebody's just going to frack some more oil and pump it out of the ground very, very, very quickly to meet demand. And if it's not America, it's Canada. If it's not Canada, it's Mexico. If it's not Mexico, it's Argentina. If it's not Argentina, it's Russia. If it's not Russia, it's Bulgaria. I mean, there's plenty of places on this planet you can frack. Interesting, huh? Isn't that interesting? So is there a reason why we should go to $100 a barrel, guys? We were just there 3 months ago. Are we going to go back in the next 3 years? Probably not. Okay, so when it's overpriced, sell it. When it's artificially low, buy it. Okay, here we are, we're tickling $50 a barrel. I think that's us just the market selling resistance. It's psychological level. That's the level that gets reported by the news, right? Earlier, oil prices broke through $50 a barrel, right? So that's just the one that gets reported a lot. So I don't know. Trade the range until the range breaks, and then I think we'll just go into a new range. Okay. Another point is when it breaks, you can wait for the pullback, but at least be ready, waiting for it to break, and notice when it breaks. Debisa says higher oil price is good for U.S. and Canadian companies that are producing the oil. Sure. But low oil prices are good for other companies in those economies as well. Another thing that it means is that central banks are not going to raise interest rates anytime soon. How could you raise interest rates when you have negative or flat inflation? Okay, so it does impact things, guys. So have you bought European equities? Remember, the ECB just gave you free money? Did you take it? Let me try to zoom in. I don't know if I have enough room. Yeah, look at the triangles, guys. There's one here. Let's see. I can fit that in. Can I? That's the European stock market with Quantitative pumped into it. Nice, huh? Do I like them? No. Who cares about like? European Central Bank pumps free money into the market. What's the point? What's the purpose? Why do they do it? To increase asset prices. That's it. Cause As long as they keep printing free money and pumping it into the market, Kareem, just go back to quantitative easing 1, 2, 3, and 4, whatever that was in America. Every time they did it, the stock market went up. Because that's the point. Increase in money supply, right? Yeah, but it's, I mean, I don't know. It's elementary, my dear Watson. That's it. That's why the rich people get rich and the poor people don't. Who's exposed to the stock market? Those with money invested, or those that own the shares, those that have retirement accounts that have intermediate stock market, those that actually own the corporations, or those that service the corporations, yada, yada, yada. But quantitative easing, the whole point of it is to increase asset prices. So they add money into the market. Prices go up. So yeah, just buy the index. So thank you, ECB. So the stock market's going up in the euro area. Let's check out Germany. Looks like a nice run. Is that nice? You want to look at the Nikkei in Japan? Put that on a daily chart. You probably noticed the role reversal set up as well. Are the Japanese stimulating their economy too? Yeah. I don't know if I have enough data. Let's see, probably not. No. It's the highest in like 15 years. Cool. Thank you, quantitative easing. And you know, like if you take the S&P 500, here's the S&P 500. Okay. If you take this and give me, no, it won't give me weekly either. Well, this is, I think you understand. If you take this price, or the price action, and like obviously a move here, right? If you go back even farther, going all the way back to 2007, and you track the stock market, how it went up and down and up and down and up and down and overlap quantitative easing, and then when quantitative easing ran out, right, then you get a decline, and then QE2, spike, then decline, QE3, spike. Every time assets go up. Isn't that lovely? Look at this, 2011. That's with Europe collapsing. So anyways, I remember doing a non-farm payrolls event at FX Street during the crisis. Actually, I remember lots of them, obviously. There was one day that I noticed the Spanish stock market had declined 78.6%. And I asked everybody at the event, and there was like, 600 or 700 people in the webinar. And I asked them, how many people think the Spanish stock market's going to go to zero? Right? And no, a few said yes, but I'm like, look, in the real world, you honestly believe it's going to go to zero? And everybody said no. Like, look, you have an opportunity now to buy the Spanish stock market at 80% discount, and then just give it to your grandchildren. As a college graduation gift. Right? Make them sit on it for 30 years. Did anybody listen to me? Probably not. Someone asked, how do you trade these stock indices and stuff on the Trader's Way account? Go to your Market Watch window, right click on it, make sure you have selected Show All. Okay? And these are cached, these are not binaries. So you have the Dow Jones cache, S&P 500 cache. Right, I don't know if you care about NASI, but there's the NASDAQ cache, UK cache, right? That's the FTSE 100, German 30. There's a CAC, Euro stocks, Nikkei, so on and so forth. Gold and silver, yada, yada, yada. And then, right? Then you could trade West Texas Intermediate, which is U.S. oil. And then there's binaries on whatever generic oil. Lots of opportunities. Wyatt says you just wish you had the instruments to set up to trade these. Well, why not? Fund a live account at Trader's Way. It's right there. Not a problem. You're in business, son. Talk to support, Joseph. Hey, love you, babe. We gotta jump. Peace on earth. May the pips be with you. May your profit be above average. Take care of yourself, you hear?